Okay, welcome everybody to Wall Street Reporters Investors Discovery Day live stream. Oh, good. There we go. Okay, now it's better. We are back with AIML Innovation. Tim Daniels. Tim, welcome back.
It's always good to be back on the show. Thanks for having me, Jack.
So for anybody that's brand new to our program, our goal is to bring you those stocks which have that 10x to 100x upside potential. Companies going after multi-billion-dollar market opportunities at a key inflection point right now in their growth cycle, and with multiple catalysts in place that can ignite that growth. We've had a whole bunch of these 10x to 50x stocks in the last 18 months. Now we are working on AIML to see if this is going to be that 10 bagger plus. Tim, great news that you came out with yesterday. Looks like AIML is expanding into the multi-billion-dollar, basically the digital transformation of the mental health services space. Really exciting deal. It's a European company. So I wonder if you could do two things. One is explain to us a little bit about, first of all, the significance of the deal, how that, the impact, because this sounds to me like it's really going to be a transformative deal for AIML, and also, what do they do, and how this is really, how you're going to scale this, because it sounds very exciting.
Mm-hmm. It is very exciting, Jack, and thanks for letting me share this with your viewers. So the company that we just announced our acquisition of is a company called Tech2Health, and they're out of Paris, France, and they're a digital health innovator with a basket of health tech products and services designed specifically to improve individuals' mental well-being. And a lot of viewers don't understand, they don't realize that the new pandemic is the mental health pandemic. And in part, this is a spin-off or a result of the last 18 months of the coronavirus pandemic. What we've seen globally is a huge increase in depression, suicide, alcoholism, drug abuse, spousal abuse, and so on and so forth, all as a result of all of us being under a tremendous amount of stress over the last 18 months, fear of losing our financial livelihood, fear of losing
the whole mental health thing is probably one of the big unaddressed opportunities in the healthcare, because it's always something which has never been, it's always been a little bit stigmatized, and I don't know, for whatever reason, in the last couple of years, it's becoming more, I don't know, like a lot of millennials talk about, like they're very into the mental, it's becoming a much more, especially now that you have the digital aspect of it, I think it's going to gain a lot more kind of traction with
I do as well, because there's the privacy, the feeling that you're not putting yourself out there publicly with your mental health issues, because again, you're right, it is something that's been stigmatized in the past, but nevertheless, it's a huge issue, and it's not going away. And Tech2Health is a company that's really well positioned to help resolve this matter with patients globally.
And they have, from what I understand, okay, so their platform is the digital platform. So the company has, I think they're kind of, they had like a beta phase or something where they had previous revenues that generated I don't know if it was a 4 million in revenues in the last couple of years, like it's just kind of getting, like what's explain to us kind of the history, kind of the traction. I guess the traction they've gotten in the market is important.
Yeah, exactly. So they have a unique blend of a digital platform with some live counseling and digital therapy. And they had a version 1.0 of their technology, which they deployed and successfully used over the last couple of years, and really proved their business model, showing that they had the ability to generate revenues of about $4.2 million over the last couple of years.
I think was it euro or dollars? Was it euro?
So this was the US dollar equivalent.
US dollar. Okay. Because otherwise it would be like 6.
Yeah, and they've partnered with a number of leading European health insurers such as Malakoff, Humanis, Group Mutual, MAPA, and so on. These aren't household names in North America, but they certainly are in Europe. And so they've definitely proved their business model. Now, what's even better today is they've learned from that version 1.0 platform, and they've migrated from that to a version 2.0. And so they have an even more robust and complete platform and a complete set of services that they can now offer to their users, and are just coming out the gate now with this version 2.0. And they've signed their lead contract, the first contract, which was, really exciting first contract for a company right out of the chute. And it's with a French-based multinational manufacturing firm that has 170,000 employees globally. So they're no small potatoes. Okay. And it's a multi-year contract to supply mental wellness support for those 170,000 employees globally.
How much? So Tim, they have a contract in place right now with this multinational with 170,000 employees to provide mental health, this digital mental health service to them.
Right.
How much is that? How much is that going to generate? Like this, is this just a new contract? Basically, this is just signed.
So it's a brand new contract, and so in fact, because it's a global rollout, the phase one of that was working out all the bugs in two of their territories. So they chose Spain and Portugal, and they've deployed in those two markets. And over the next couple of months, that will be expanding globally. So it is a brand new contract. But to give you an idea of the potential in these types of contracts for mental health, and this is, we mentioned this because this was a good flag bearer first contract, but it's not the only one that's in the bank, so to speak, at this point. In fact, between the contracts that have been signed already and the pilots that are being put in place right now, we already have access to between about 400 to 500,000 employees and patients of these different companies and insurance providers.
How much? It's monthly revenue. It's all it's like a SAS model.
Well, so to do the math on it, in Europe, the governments have passed the rule. Excuse me for 1 minute. I'm fighting a bit of a summer cold here. The governments have legislated that for digital health therapy such as this, the insurers must reimburse, insurers, either private insurers, employers, or governments, must reimburse to the extent of 800 euros per customer per quarter for a 3-year period. So that works out to, in terms of US dollars, about $4,000 per customer per year. So when you start extrapolating that over a potential customer base that is already in place today of between about 400,000 to 500,000 potential users, the numbers get really, really big, really, really fast.
It's okay. Now the question is, okay, so first of all, I think the takeaway here is, excuse me, it's very impressive. So you have this validation from this, multinational that has, 100,000 plus employees, 50,000 plus employees. So that's impressive. I mean, and again, I know to get that type of sale in Europe is a lot harder than in the US. They're a little more conservative. So I think that's very significant. So it shows that this company can gain, real traction. So how much now? They have 170,000. How many of them are going to be using the service, do you think? And how much per month?
Yeah, that is, to be seen. As I said, the first pilots are starting up now in 2 countries, in Spain and Portugal, and so we'll be able to report back, over the course of just the next month or 2, what sort of uptake there's been. Now, again, there's multiple revenue streams that we're talking about. What the numbers that I just gave you are on the mental health therapeutics. But over and above that, there is going to be non-medical interventions by counselors and trainers through online therapies such as meditation, relaxation, yoga therapies, art therapies, and so on and so forth. And so there's a number of different types of platforms that will be, provided to these customers or employees of this manufacturer on a global basis. So we will be enjoying, numerous different revenue streams from it.
Okay. So that's interesting. Okay. And then I think once you have a good case study with one, it's probably going to be relatively, there's going to be a path to get more of these, major enterprise customers.
Exactly. And in fact, I'm not going to steal my own thunder, but imminently we will be announcing some additional contracts that are going to, I believe, turn some heads. We're in discussion with some major players throughout Europe and South America as well. So
okay. So it's interesting. Okay, so basically the deal is the company's Tech2 Health. Now, the numbers behind the deals, you're getting a piece of the company, right? You're going to get it, I think, was 20% roughly?
Yeah, so we have 22% ownership in their global operation and 70% of North America. So US, Canada, Mexico, that market, we control the majority of.
Okay, so basically, the North America is you're going to own 70%. You're okay. That 20%. Okay, so it's a pretty good deal. Now, you want to talk a little bit about kind of the comps in that space, in the digital, health tech space. Let's say in Europe, just from private companies. I think we were talking about the other day, because the number. I mean, like right now, your market cap is only 20 million roughly.
Yeah, exactly.
You're getting 20. How much could this? Just this deal, because I don't think the market really understands the deal, because it's otherwise the stock would be a lot higher. So
sure. Yeah, exactly. For example, we've looked at a number of other companies in the same space, in the mental health space, digital application of mental health here in Europe, and brand new startups, companies that are at just beta development in their product with green management teams, not a team that has several $1 million of revenue under their belt and a 2.0 version of their product. We're talking about green companies that have started in the last couple of months that are attracting funding from major VCs here in Europe at a pre-money valuations of between 15 to 20 million dollars, euros. Sorry, more than double the valuation that we paid in this case. So I think we cut a pretty fair deal for our shareholders.
Yeah, no, I mean you actually no. So far, I mean you've made some really good deals between the initial health gauge, this. I'm kind of getting the sense that investors I don't think they really understand fully, like, the opportunity here with AIML, and I don't know. I'm not sure why. Sometimes it takes a while for investors. I found some of our biggest winners, it took a while for people to kind of get it. I don't know why, but then sometimes it takes a couple of months, so for them to kind of figure it out, because then they understand it. But so basically, essentially, what you're doing is you're really building out kind of like this digital health ecosystem between the health gauge, which serves one aspect. You have now this tech to health deal. So what's, what else are you going to be adding? And maybe you can share a little bit about, your kind of your vision, kind of the big picture that you see here, building out this, this global
Sure.
What's your goal here?
Yeah. Yeah, absolutely. And so, as I, promised your viewers over the last weeks and months, we would be advancing towards some other acquisitions. Well, now we've unveiled our first. We do have others in the pipeline, and it's important for us to find acquisitions that, first of all, add value, that we're acquiring at non-dilutive rates, meaning we're getting them for the price that we want them for, but also that there's synergy between what those companies are doing and what the other companies under our umbrella are already doing, because we find that it's important that all our acquisitions have the opportunity and the ability to leverage off each other. So, for example, with this tech to health, with this lead contract with this manufacturer that has 170,000 employees, that company has already come back to tech to health and said, "Okay, that's great. We're pleased to get that mental health contract underway, but we have another issue with our employees. We have a significant number of our employees that have hypertension issues, high blood pressure issues. Do you know of anyone else that could provide us with a solution on the issue of hypertension?" Well, of course, yes, we do. We have HealthGauge, our other acquisition, and that's exactly in their sweet spot. One of the things they do very, very well is the ability to to monitor and provide early data, early warning with respect to hypertension issues. So that's one example of how the companies that we're acquiring can leverage off each other. Conversely, while Tech to Health has significant networks already developed throughout Europe and South America and in parts of Africa as well, they don't have as much of an influence into the U.S. market as they would like, and to that end, HealthGauge can be very helpful using their network of contacts to help Tech to Health establish itself within the North American markets. And so it's very important for us to find acquisitions that have synergy and the ability to leverage off each other. Also, it's important that we find acquisitions that allow us to diversify across geopolitical regions throughout the world. So we now have a global footprint between HealthGauge and their activities in North America and Tech to Health with their inroads in Europe and South America. We're a long ways along the path to having a complete global footprint, and that sort of diversification is very important, because you will find that certain areas of the world will go hot and cold, or there'll be surges in need in different areas and so forth. And so the ability to diversify ourselves across different geographical regions is also diversifying our risk. And so we really have the vision of building this into a global going concern, digital healthcare company that is multi-pronged and that has several different synergistic assets under its belt that all have the ability, both as standalone assets to survive and thrive and grow on their own, but also the ability to pair up with other of our acquisitions, to make them collectively stronger.
Okay.
So that's our vision.
Tim, so getting back to just the numbers, just so people can understand the math here. What is so Tech2 Health? With this deal that they have right now, this is just one contract that they have, just a new contract.
Yeah.
You know, it's whatever the number is, 150, 170,000. How much? So how much can that generate? I mean, like, you know, in revenues. Do you have? I mean, is there like some sort of projections out there that, because it sounds like that's an opportunity.
We yeah, so you know, of course, we've you know, done some internal crystal ball gazing, along with a you know, some initial feedback from the customer as to what they would expect, and they do believe that, you know, the initial thrust is going to be on the counseling side, meaning a number of online sessions in different countries, you know, providing, you know, the wellness, the mental wellness, relaxation, meditation, mindfulness, yoga, and so on. And they feel that minimum is going to be, you know, about €1 million per year to get underway. And then as their worker base understands the services and opportunities to work with our counselors on a one-on-one, we will start to see, you know, more of the digital therapeutics kick in, and this is where we get into this, you know, 4,000 per patient per year type of model, and so we do think it's going to grow organically, starting first, you know, with the group sessions for wellness and relaxation and meditation, and then grow outward from there into the individual sessions.
So, you know, it seems to me that if you had even like maybe, I don't know, 5-10% of their employees use the service,
it'd be, the numbers would be,
you know, 30 million plus revenues.
Exactly. Yeah. That alone.
That's one contract, right?
Yeah. Were we able to achieve, you know, that sort of penetration, that one contract alone would be a company builder.
I just realized that, you know, there's another company for we're talking about comps, kind of in this digital mental health space. I think there's a company called Calm, which is like an app. I think I don't know, it's a meditation app or something like that. I think their valuation, I think they raised venture money at $1 billion plus, crazy numbers.
You know, clearly the market,
space, essentially. That's your touch that space.
Yeah, exactly, and you know, clearly the market is understanding the potential and the digital, you know, application of mental health issue. It's a huge and vastly underserviced market at this point.
Okay, what other acquisitions? You know, it's interesting. You know, Tim, like, you know, you haven't been very promotional. You haven't like talked about like, hey, we're gonna do this, we're gonna do. You've really kept things very low key. Like this deal was a complete surprise for the market. You know, so what else do you have, like, you know, up your sleeve? Like, what other acquisitions could you be, you know, doing in the next, I don't know, a couple of months?
Okay, well, we do have, you know, 2 other potential acquisitions that we've been in serious level of due diligence for some time, and we're very careful about that. We understand that we're entering into these relationships over long periods of time, and that there has to be a real meeting of the minds where our vision for them going forward, for companies like Tech2 Health, and their vision mesh with each other. So, you know, with Tech2 Health, for example, it's a company that I've been working with personally for about 2 years now. I'm not a patient of theirs, I must say, but I've been working with them on a potential acquisition for about 2 years now, and that's the main reason why they chose to partner with us, even though we were giving them less than half the pre-money valuation than what other very large VCs in Europe were prepared to offer them and have been handing out to other much earlier stage companies than theirs. It's because more important to them than just the check is knowing that they've got the correct partners going forward who are like-minded and have the same vision for the growth of the company. And so we are, very methodical and careful, and we do, extensive due diligence with these potential acquisitions. So we do have a couple more in the works, and they are equally as exciting as the ones that we've closed on and announced to this point. And I would, suggest, fingers crossed, of course, again, they're never done until they're done. But one, I would very much hope that we can complete certainly before the end of the summer. And again, not only does it service, the digital healthcare space with an AI component, and again, those are, some of our prerequisites.
So the big idea, the common thread with all the companies under the umbrella is going to be anything that kind of touches AI, machine learning.
Yeah, the AI is very important to us because we do see that the artificial intelligence is one key to establishing a platform that allows you to grow exponentially. If you're relying on human input, your growth rates are limited to 24 hours.
You can scale. This is the market loves it. You have the massive opportunity to scale. You have that recurring revenue. It's a fantastic business model. Once you have the right kind of product. So, and it looks like right now you have essentially two main offerings. You're going to have the mental health. You have the health monitoring, and now you need one more, which is going to be in the next 6 weeks. We'll hear.
So, with a little bit of luck, I'm feeling, having gone through this process, now 2 times with other companies, I believe that, as I said, I think, before the end of the summer, I think we could close on the next acquisition. We've completed our due diligence, so we understand who they are, and we're like-minded, and we're already on the same page with respect to what the numbers will look like for the acquisition. And we do also see tremendous synergy between what they do and our first 2 acquisitions. So it checks all the boxes for us. So I don't anticipate that there's going to be anything that prevents this from moving ahead. Again, until it's finished, it's not finished. Always caution that way, but it's looking very, very.
Okay. So it sounds very exciting. You're building out this digital health, company. The market cap is only 20 million. You have cash. I think somebody mentioned you have, how much cash on hand do you have right now? 3 million.
We've got about 3 million left in the treasury right now.
Yeah, good cash position. You're not overpaying for these companies, which is good. They're good deals. They're all like win-win type deals.
Yeah.
I think it's gonna be very interesting for investors to watch kind of the story evolve. I have a feeling that you're being very secretive. You're not telling us kind of the big picture, the big vision of where this is going to be in a year. Can I pull that out of you, Tim? Can you give us? Is this going to be like 100 million revenue? What's going to be what is this company going to look like? Let's call it by the end of the year, by January 1st, 2022. What is AIML going to be? Could this be $1 billion business? Is this the goal here, to build something which could be potentially that unicorn?
It absolutely has that potential. Now, how quickly we're able to gain traction in these different markets That's always a bit of an unknown when you're talking about new technologies, new markets, new for everyone, not just for us, but for the users.
But the market, the market, like a lot of these health tech companies, the market's buying, they're buying into the future dream. They're not buying what it is now. So I think once you built out, I think once you have this kind of footprint, you have this global footprint. Yeah. It's going to be actually a very valuable asset. Maybe
so again,
at some point.
So to give your viewers some sort of target to shoot for, we've always viewed ourselves as having the potential of a Livongo, and I know that's a high bar to try to clear, but we really do believe that that we possess the technical goods and the business model to rival what they've done, and in fact we see that in some ways we have some clear advantages. Sure, they were in the market a couple years before us, and that's always a good thing. But we do see that we have some competitive advantages, so to speak, in that our products are applicable to a lot wider range of uses than Livongo. Livongo correctly focused on a very key chronic market, which was diabetes, and they did a very good job. They got bought out by Teladoc for, it was about a $16.5 billion acquisition at about $159 a share, if I remember the numbers correctly. And the good news is that while they were very successful in the diabetes market in terms of providing care and attention to the chronic diabetic users, their penetration of the U.S. market was something less than 3%. So there's still a tremendous opportunity, even within just the diabetes market. But our products, for example, our health gauge technology is applicable, to a whole spectrum of chronic illnesses, not just limited, to blood sugar monitoring, as was the case with Livongo. So, we do see that we've got that potential, and that is our vision. We want to build this into the company that other companies want to become, and we think we've got the tools to do that.
Okay, it's kind of like essentially this is the type of thing where you're going to be building out this kind of portfolio of these digital health, these health tech assets, and 6 months from now, I think investors will they'll wake up and they'll say, wow, this is like, especially when you have some real when you start to generate revenues and all that stuff. And the space is just getting hotter and hotter all the time. I know, first it was red hot, and tech health, was it the Teladoc kind of, the stock went down a little bit for a while, but the healthcare is always going to be, especially the digital transformation theme is going to be hot. So I think it's a really good time for investors to, really take a look at this. And that type of thing. Tim, to recap, let me see if we have any questions here. Not a lot of questions. We had actually some good comments here regarding the tech to health. So I guess Yazan is saying one of the big advantages is that, the benefit of this telehealth, this digital health platform is, people don't want to go to a psychiatrist or whatever, talk about their it's just like, especially, it's like, I don't know. And maybe in Europe more so. I don't know. It's like in the U.S., people like to talk. They're much more open about their problems. It's like they want to share with everybody. I think much more private. It's much more appealing, especially in Asia. Also, I think only the Americans love to talk about their problems, media, whatever. So I think you got a winning product there.
And that's absolutely true. It's the privacy component, the convenience component, the idea that you don't have to be just down the street from your therapist. If the therapist you like is halfway across the country, that's fine. So there's those conveniences that are built into the system when you're talking about digital delivery, and the same thing from the therapist side. The number of patients that they can see over the course of the day increases. They don't need these great expensive brick and mortar facilities with 3 assistants and nurses and so on. So everybody comes out ahead. It's a far more streamlined delivery of the service, but the service itself is every bit as robust as you would get from the face to face. And so yeah, it really makes sense.
Tim, to wrap up here, what other news flow can we look forward to in the coming in the coming weeks?
Okay.
July.
Yeah, there's all sorts of news backing up. We're going to have a series of news releases on Tech to Health with respect to more detail on the products, the management, consulting groups, the contracts that they have in place now and going forward, and as well we are getting backed up with a few different news releases on the health gauge front as well, that people are going to want to be on top of. So there's all that going on, and somewhere in the midst of all that, I think we're going to be able to throw in another acquisition to talk about. Fingers crossed on that.
Okay, well, you're definitely in the right place at the right time. So Tim, thank you again. Actually, let me see. Do we have any questions coming in? No, just a comment. Okay, so we have a fan. We have a fan of AIML here. Tim, let's kind of close out on, like, I haven't asked you this question in maybe a little while, but it's one of our favorites here. So, in your opinion, what would you say, like right now, are the top 3 reasons why investors should consider AIML?
Sure. Okay. Well, we're definitely in the right space at the right time, both with respect to digital healthcare in general, and specifically now moving into the mental healthcare space. Those are extremely hot topics, and they're not going away. So that's that's one good reason. Number 2 is we're on the cusp of some other very creative acquisitions that are going to increase our stable of companies under us that I think are going to impress some people. And number 3, we represent tremendous value. I mean, we're a micro cap, and we're on the cusp, we believe, of breaking into the field of the respectability when it comes to proving our business model, and so we're going to be turning that corner and getting some revenues going that I think are going to justify much higher market caps than what we've enjoyed to this point. So I think we represent very good value right now.
Yeah, I have a feeling it's going to be probably like once you have like maybe the next deal or the deal after, once you have like 4 of these things under the umbrella, under the AIML umbrella, at that point, covenant investors will kind of, it'll just all of a sudden click, and they'll understand like, what it is that you're doing and kind of the opportunity. I'm sure the stock will probably be a lot higher by then because, that's the way the market is. So, okay. Tim, again, thank you for joining us for the update, and thank you everybody for joining our live stream today, and we will see you on the next one. Thank you again.
Thanks, Jack.